Hyo is betting on the fashion and beauty business as a weaker ringgit squeezes its wholesale business margins. The traditional Chinese medicine player is really optimistic on its newly launched segment and plans to build a fashion brand similar to Armani, offering mid to high-end products. MD Tan Keng Kang sees the new venture significantly contributing to its earnings, probably doubling it in 2 years' time. The company is already offering skincare products and women's scarves, which will start contributing to margins this month. Other fashion accessories, perfume and beauty products will be added into its portfolio too. Tan says that the investment for the new segment will not be substantial, as Hyo will be leveraging on its existing MLN distribution channels, and that the products will mainly produced by OEMs in China and Malaysia. Hyo ventured into the fashion business after appointing fashion icon Jimmy Choo as a non-executive director last October. Opposition lawmaker Tony Phua claims that Putrajaya had granted 1MDB a bailout to the tune of 3.2 billion ringgit. The PJ Utara MP had asked if the MOF had taken over the borrowings associated with 1MDB's real assets, which are the 800 million ringgit loan from SOXO and the 2.4 billion ringgit in Sukuk bonds by Bandar Malaysia. However, PM and Finance Minister Najib Razak did not give Phua a straight yes or no answer, which irked Phua. In a written reply, the MOF merely stated that it has yet to finalise on an appropriate consideration as written for 1MDB to transfer its assets to MOF Inc. The ministry also said that while the PAC recommended 1MDB to transfer ownership of Bandar Malaysia, TRX City, Air Hitam Lands and Pulau Indah Land to MOF Inc., the committee did not make any recommendation with regards to the debts that remain in 1MDB. Aviation stocks are set to fly high in the first half of 2017, despite having soared since the start of the year. Maybank IB research says there is further upside for aviation counters until supply catches up with demand by the end of second quarter this year, until which high load factors with stable yields are expected to continue. The second quarter, however, isn't looking as great, which is why analyst Mohsen Aziz expects the sector's profit to still decline in 2017, though at a lower quantum of 6% as compared with its original 22% on MAHB's revised forecast. He adds that the total fleet size growth to a total of 262 aircraft this year supports Maybank's 8% traffic growth estimate. Since the beginning of the year, shares of MAHB, AirAsia and AirAsia X have grown between 12% and 27%, lifted by strong 4Q earnings. In comparison, the benchmark KLCI has gained 4.9% year-to-date. Maybank IB is keeping its buy calls on MAHB and AirAsia and maintaining a hold on AirAsia X. Maxis's unit Aircel will merge with the wireless business of India's Reliance Communications to create India's third biggest mobile phone network operator with more than 190 million subscribers. According to India's news agencies, Reliance has gotten a green light from the Securities Exchange Board of India to spin off and merge its unit, Dishnet Wireless, with Aircel. Reliance, controlled by billionaire Anil Ambani, has filed an application with the National Company Law Tribunal in Mumbai for the deal. Reliance and Aircel will transfer some debt into the new entity, which will have debt of about 280 billion rupees or $4.2 billion. Reliance and Maxis will each own 50% of the merged carrier. Currently, Reliance is the fourth largest mobile carrier by subscribers, while Aircel ranks 6th. Construction and property player TSR Capital has bagged a job worth about 120 million ringgit from the East Coast Economic Region Development Council. The job involves building a port link road in Kuantan Port City in Pahang. It is under Package 3B of the Development Council, which includes building a toll plaza, trumpet interchange, Malaysia-China Kuantan Industrial Park Inner Road, and drainage diversion works. The construction period is 130 weeks, starting from the date of site possession. TSR says that the project will contribute positively to the earnings of the group for FY 2017 through FY 2019.